In this presentation, we will continue on with our comprehensive problem related to a not-for-profit, non-profit organization that has two programs, one being an exhibition and sale of crafts, the second being education about crafts. In prior presentations, we have entered the transactions into our general journal. We have posted those to our worksheet, our trial balance worksheet. We have entered the closing process, and we have created and constructed the first financial statement that we were building, the statement of financial position, similar to, or pretty much the same as, the balance sheet. Now we're going to be constructing the second financial statement, that being the statement of activities, similar to the income statement. So you'll recall that in the prior presentations, we have three trial balances, so we don't want to get too confused with the three trial balances. Up top, we have the first trial balance where we posted all the transactions for the financial transactions. This looks most familiar to those familiar with normal financial accounting, it having the expenses broken out down below by the expense category. Then we took these ending balances and created a second trial balance with them, those being the beginning balances here. This trial balance is where we took the expenses and reallocated them to the function, what they're used for, being the programs, the exhibition program, the community education, the management and general, and the fundraising. So these then having the balances that were previously in essence, the expense accounts. Then we took this information, the ending balances, and created another trial balance with the beginning balances here. This trial balance then closing out all temporary accounts, income statement type of accounts, or statement of activity type of accounts, to what would be the equity section in a for-profit organization, of course, being the net assets section here in the not-for-profit organization. Okay, that said, we're going to be working with the middle trial balance for the most part. The middle trial balance, you'll recall, doesn't have the grouping of expenses by the expense categories we are familiar with for-profit accounting, but having them reallocated to the programs, the exhibition program, in this case, the community education, and the support services, the management in general, and the fundraising. This is what we're going to use in order to construct our statement of activities. Note that as we construct the statement of activities in this format, we would also need a supporting schedule in some fashion, either with the financial statements or in the notes to it, breaking out in more detail the information by the expense categories as well, such as this worksheet we have made previously. So just keep that in mind. It's often a good idea, or oftentimes it will be formatted in such a way that the statement of activities will be broken out by the function of the activities, what the activities do, by the programs and the supporting information to it. And if you give more detail than that, it can get a little bit intimidating to look at the statement of activities, and therefore oftentimes you'll put the more detail, the categories of the expenses, in a supporting schedule. So now also note that we did the balance sheet type of report, or the statement of financial position, before the statement of activities report, the income statement type of report. Many people would argue that you could do it the other way around in order to get the bottom line on the statement of activities to help you out to complete the ending section, the net assets section of the balance sheet. But we think it's nice to go through the balance sheet first to have something in balance, and then go to the statement of activities and work out, basically breaking out the detail of the net assets section. That said, let's take a look at the statement of activities. Here's the statement of activities. It's going to have columns here. This is the confusing thing. This is the different thing from a for-profit type of organization with the statement of activities. We're going to have three columns. Those with donor restrictions, those without donor restrictions, or other way around. Those without donor restrictions, those with donor restrictions. Now, of course, without donor restrictions is going to be the majority of the numbers being there, because that's going to be the default. No restrictions, although, of course, we have restrictions in terms of what we use the money for, that it's in alignment with our purpose as a nonprofit organization, but no restrictions from the donors. And then with donor restrictions, obviously, it has donor restrictions and the total. This will hopefully make more sense when we consider the items that we have in the trial balance, where we can't break them out by column, really. So we have these labeled as with donor restrictions and without, but we can't really look at just the bottom line number by column in that way. And so now when we make the two columns in the statement of activities, you'll kind of see how this applies out and why we need, this format. Okay, so let's go through this. We're going to start off, of course, with revenue type of account. So we're going to say revenue and support is going to be up top. These are going to be our revenue similar accounts. We're going to have the contributions first. So contributions. So the contributions without restrictions is going to be this one. That's our main revenue kind of similar type of account in the not-for-profit organization. That's the one we want. So we're going to be in cell V65. I'm going to say negative, and we're going to pick up that 44,121. So there we have that. And then, of course, with donor restrictions, we have nothing there. So we're going to sum this up, and that's going to be the total for this item. Next, and we might want to basically highlight these as we go. So sometimes I can say, we found a home for it. So I'm going to put a little green thing saying that one has a home, which is nice. So I'm going to go to the membership dues now. Membership dues is another type of revenue account. And I'm going to say this equals, and we'll point to the membership dues this time. And that is not restricted, so we're going to be in cell V66. I'm going to flip the sign with a negative instead of an equals, and we're going to pick up that membership due amount, which is going to be in S59, and enter. So there we have that. Then we have the tuition and fees, which is going to be next. I'm going to say equals, and we're going to point to that tuition and fees. And once again, I'm going to flip the sign. This is another form of revenue. It's on a credit in the trial balance, and we want to make it a positive number in the statement of activities. So there is that item. And then we have commission revenue. So commission revenue is going to be here. That's the next line item. It's got a credit as well. It's revenue to the organization. So we're going to have to flip the sign in V67. I'm going to say negative. We're going to pick up that commission revenue and flip the sign for it. So, and lastly, we're going to pick up the investment income, which we skipped, I think, on the trial balance. It's up top, the investment income. So this one, we have investment income with and without restriction. We have a restriction here. So instead of saying with and without and having two line items, we're simply going to put one line item called investment income. And then we're going to break out between with and without with the columns. So here's where the columns are coming into play, which is nice. So I'm going to say negative of, and I'm in column without restrictions. So investment income without restrictions, 688. And then the column with restrictions in W69, we're going to pick up the investment income with restrictions. So there we have that. And I haven't been finding a home for these. I'm going to go back and kind of find a home and put a little green dot that they found a home for these. So we can go back and look at the good we've done for these accounts and give it a little recognition for that. So we're going to go back over here and say that these accounts have homes. So we're going to put a green thing next to them. Home has been found. And then we can do some totaling up. We can sum this up as well. So I'm going to autofill on the left side in, what am I in, X65. We'll autofill this down. And then the last line item, actually we have one more item here, which is going to be the net assets released from restriction. And that, of course, is going to be the funny item here, where we have the net assets released from the restriction. This is, now you can see it moving from a column kind of standpoint to going into the one without restriction, and it's going out of the one with restriction. So again, you can think of these kind of like revenue accounts. So this is the one without restriction that is going up in the credit direction, because it's kind of like a revenue account of the 3,800. So the thing that's kind of funny when we move this over to the financial statement, the statement of activity, you'll note that this is an increase in a credit direction given by the brackets. In our plus and minus system on the statement of activities, we need a positive number for the without restriction items because it's an increase. So I need to flip the sign of this negative 3,800. I'm going to say negative of that number. And then on the one without restrictions, in our trial balance, it's a debit because it represents kind of like, you can think of it kind of like an income statement number that's going down. It's kind of like a revenue number, which is going down. In other words, has a credit balance, so it would go down with a debit. Over here, we need it to be a negative. This is one kind of instance where we're going to show a sign not a debit and credit, but a negative. So I need to take that other one and flip the sign by putting a negative and pulling over that 3,800. So these two accounts make sense, but you can get them mixed up in which is a debit and credit and what's going to be the plus and minus over here. So mold that over a bit, and that should be okay. So now we're going to sum this up. We'll sum this up this way, like so. And then we finally have the total revenue and other support. Total revenue and other support. Let's go ahead and use the trusty sum function to sum up these columns. Trusty sum equals the trusty sum. Shift F9, letting go, up arrow, shift. I'm doing this all with the keyboard if you want to do it with the keyboard. And then closing it up. And then we'll do that again here. Equals the sum, shift F9, up arrow. And then again, I would sum all the way to the top even though there's zeros there. You don't need to, it's okay. You want the same formula in place. And then of course we could also autofill it across if we wanted to do it that way. So there we have that, and that looks good. Next, we're going to have the expenses, of course. So next, we're going to be going to the expenses. We may want to note that we did find a home for these two. Those have a home now. So let's recognize that. Those have a home. And then now we're going to have the expenses are going to be the exhibition, the community education, the management and general, the fundraising. This is where the expenses are grouped by the function, what they're used for, as opposed to the classification, the category. So we're going to say, all right, this is going to be the expenses. It's going to be the exhibition. And then we've got the community education. And then we got the management and general. And finally, after the management and general, we have the fundraising, raising funds. Now let's pick up the numbers. We're going to say this is going to be equal to. We're looking for the exhibition of the 22,366. This is going to be equal to the community education, and that's going to be the 23,333, that number. And then we're going to the management and general, 18,638. And finally the fundraising, the raising of funds is going to be the 11,183, and then there's not going to be anything in the column for with donor restrictions with regards to the expenses. These are the purpose of our organization. So then we're going to sum up over here in the outer column equals the sum of these. We can autofill that down then using the autofill function. We're going to go on the fill handle. Auto drives it down. Dr. Phil does the calculation. And then we will total this up, and that'll give us the total expenses, the expenses totaled. So I'm going to sum up these four total expenses by the grouping of function, in essence, what they're used for, equals the sum of these four items. And it then summed up for us over here, which is good. We can add the 0. I'm going to autofill across and add the 0 right there. I'm going to add the underline because I lost the underline when I autofilled it down. So I'm going to go to the Home tab, Font, and Underline. And then we're going to say there's a decrease in net assets. Now this is kind of like the bottom line number of what we would consider the income statement, the statement of activities here. And it always used to confuse me again, the decrease in net income, net assets. It seems kind of funny. We don't have something similar to net income or net loss here. But it does make sense because, of course, the net assets represents the equity section, and the net income, if we called it net income, would close out to the equity section, retained earnings or capital. So we're talking about the change, in essence, in the capital account, the change from one period to another within the balance sheet account, which would be similar to retained earnings or capital, the net assets section. So it would be similar to calling net income the change in equity, the change in retained earnings or something like that. So in any case, decrease in net assets is kind of like the net income number, and therefore it's going to be equal to the total revenues and other support minus the total expenses. And that gives us a negative number because the expenses were greater than the revenue, and I'm going to autofill that across. So there we have it. Then we're going to add to it the beginning net assets, and we're going to tie this into, in essence, the balance sheet number related to what would be equivalent to equity, the net assets section. So the beginning net assets, and this is going to be without restrictions, is going to be equal to, if we go up to our balance sheet, you'll recall this is similar to a for-profit, but it's one of the confusing kind of things. This number right here, the net assets without donor restrictions, before we closed out these numbers to them, is the beginning balance. So just like retained earnings, of course, we don't record anything to retained earnings itself. It's the beginning balance all the way through till the end of the trial balance. Then we close out the temporary accounts, the income statement accounts, revenue and expenses to it. And therefore, like on a for-profit, this number should be in essence the same all the way through. That's basically the beginning balance number. Okay, so we're going to pick that up. We're going to flip the sign. I'm going to make it a positive number by putting a negative sign before it. And then we'll pick up the same for the donor restricted ones. Now, there were two sets of restrictions, so we're going to put them in, we're going to add them both. It's going to be this one minus this one. And you might say, why with the minuses? Again, these are negative numbers, so we're flipping the sign. So negative that one, we'll flip the signs. Or you can think of it like summing them up and then flipping the sign if you choose. But in any case, it's the 14,455 plus the 5,887, and that's going to be equal to the 20,232. Then we can sum this up this way, and we could sum this up this way to get the ending net assets. That's going to provide us with the ending net assets, just these two numbers, equals, obviously, the decrease, the change, plus the beginning net assets. Then we can finally autofill this across. There we have it. Now this number should match what we got to on the balance sheet now, because this is the change. This is the bottom line net income, or loss in this case, that we're going to call decrease in net assets. And then this is the beginning net assets balance, this one. And so this is going to be the ending net assets. Therefore, these three numbers should tie out to our balance sheet. We've got the 8,558, the 11,948, the 5,887 gives us the 26,393, and that's going to be the 8,558, the 17,835. It's going to give us the 26,393. Now we had a little bit of a difference in the breakout because these two we broke out separately. These two add up to, they're both restricted with donor restrictions. They add up to the 17,835, and that's going to be this 17,835 here. So bottom line, or the end of this, if we want to just check that the financial statements are tying out, you want to check, of course, if the assets equal the liabilities plus the equity as they do here. You want to check that these numbers, the net assets and the 26,393 adds up to the 26,393 on the statement of activities. And of course, this number here, 26,393, is going to be the same as if we summed up all the blue accounts on the trial balance, 26,393, or if we were to take the assets minus the liabilities, 26,393.